In the stock market, people often believe you need a lot of money to start investing. But what if I told you that some stocks, priced around just $10, have shown more growth in a year than many expensive stocks? Yes, low-price stocks can be a powerful entry point for new investors, if you choose the right ones. Today, I'm going to share 5 companies whose stock price is currently around $10, but their business models, financial strength, and future potential make them worth researching, especially if you're starting small. So sit tight as we break down these affordable stocks that could become big opportunities. Welcome back, everyone. In today's video, we're diving deep into the world of finance, investment, and stock market fundamentals, especially focusing on low-price stocks, which many people underestimate. Now remember, low-price stocks don't automatically mean penny stocks. Some companies with strong operations, good cash flow, and stable performance trade under $10 simply because of temporary market pressure or industry cycles. The stocks we'll talk about today are priced low, but they are not low quality. These companies have real customers, real products, and real growth potential. But as always, this video is for educational purposes only. You must do your own research before making any investment decisions. All right, let's begin. This company trades in the $7 to $8 range and operates in the industrial and refrigeration services sector. Hudson Technologies provides refrigerants and related services to industries all across America. A big part of its business is benefiting from rising regulations on environmental compliance. As older, less eco-friendly refrigerants are phased out, companies increasingly depend on Hudson's modern solutions to stay compliant. So why is it interesting? First, it has stable revenue from its industrial clients, which means a consistent flow of business. Second, the demand for its services is growing directly because of these new environmental regulations. Third, its cash flow is surprisingly strong compared to many other low-price stocks, which is a great sign of financial health. Analyst price targets have even pushed above $9 or $10 at times. This stock has been gaining a lot of attention because it combines a low entry price with real, tangible industrial demand, making it an attractive option for entry-level investors looking for a solid business. Next on our list is a name you've probably heard of, AD Inc., ticker ADT. It typically trades in the $8 to $9 range and is a giant in the home security and smart home sector. ADT is one of the biggest and most trusted names in home security in the United States. They provide everything from traditional alarm systems and home monitoring to modern smart home integrations. So why do analysts often like this stock? First, home security is a stable, recurring revenue business. People pay for their subscriptions month after month, which creates a very predictable income stream for the company. Second, ADT is actively shifting into the growing smart home technology space, which opens up new avenues for growth. They've even formed strategic partnerships with tech giants like Google, integrating their security systems with modern smart home ecosystems. Historically, ADT's stock price tends to move in waves, which can offer opportunities for investors to buy in during temporary dips. At under $10, ADT is often considered a relatively low-risk, steady-growth pick for beginners who want a piece of a well-established company with a modern twist. Our third company is another household name, Warner Bros. Discovery. With the ticker WBD, its price has been hovering around the $10 mark. This massive company is in the entertainment, media, and streaming sector. They own an incredible portfolio of assets, including HBO, Discovery, DC Comics, CNN, and a gigantic library of content that spans decades. Now, WBD has faced some significant challenges recently, mostly due to the intense competition in the streaming wars and the costs associated with restructuring after the big merger. These challenges are what pushed its stock price down. But here's where the potential upside comes in. First, their global content library is massive and includes some of the world's most valuable franchises, like Harry Potter, the DC Universe, and all of HBO's original hits. This content is their crown jewel. Second, the company is focused on efficiency improvements and major cost cutting, which could lead to much healthier profits down the road. Many analysts expect a long-term recovery as the streaming market stabilizes and the company finds its financial footing. When a media giant like Warner Brothers is sitting near $10, many long-term investors see it as a potentially discounted opportunity to buy into a world-class content powerhouse. Moving on to our fourth pick, we have Compass Inc. With the ticker COMPIP, its price varies but has often been seen in the $9 to $10 range. Compass operates in the real estate sector, specifically as a modern, tech-driven brokerage. They use data, artificial intelligence, and digital tools to support their real estate agents, giving them a competitive edge over more traditional firms. So, why do investors keep an eye on Compass? First, the housing market is cyclical. While high interest rates can put pressure on real estate companies, these downturns often create buying opportunities for investors who believe in the long-term health of the market. Second, Compass has established a strong market presence, particularly in the luxury real estate segment, which can be more resilient during economic slowdowns. Third, its technology-first approach gives it an advantage in attracting top agents and serving clients more efficiently. There's significant potential upside once the real estate market picks up again, perhaps when interest rates ease. This stock frequently appears on Best Under $10 lists because its business model is highly scalable and directly tied to an eventual market recovery. Our fifth and final company for today is Banco Santander. With the ticker SAN, this stock also trades in the $8 to $10 range and is a major player in the global banking and finance sector. Banco Santander isn't just a local bank. It's a massive global institution with operations across Europe, the UK, Latin America, and the United States. So why is a global bank like Santander interesting when it's priced under $10? First, it has stable banking revenues from a diverse set of geographic markets, which helps to spread out risk. If one region is struggling, another might be thriving. Second, it has a massive and growing customer base, especially in developing countries in Latin America, which are poised for long-term economic growth. Third, the financial sector as a whole is historically strong during economic recoveries. And finally, Santander has a history of paying dividends, which can provide an extra return for investors, depending on the year's earnings and company policy. For budget-conscious investors, SAN offers an interesting combination of a low stock price with broad, global financial exposure. So, to recap, those were 5 companies: Hudson Technologies, ADT, Warner Brothers, Discovery, Compass, and Banco Santander. All of them are currently trading near the $10 mark, yet they are backed by real industries, real customers, and what many see as real long-term potential. Stocks like these can be a great way for new investors to start building a portfolio without needing thousands of dollars to get in the game. But please remember, every single investment carries risk. A low stock price doesn't guarantee it will go up. Always do your own homework, check the company's fundamentals, follow the market news, and most importantly, invest slowly and wisely. Don't put all your eggs in one basket. If you found this video helpful, let me know in the comments what kind of topics you'd like to see next. We could explore the best stocks under $5, dive into long-term growth stocks, analyze high-dividend stocks, or even look at a combined crypto and stock portfolio strategy. Thanks for watching, and don't forget to like and subscribe for more content to help you on your investment journey. See you next time.